Welcome everybody to the latest in our series of joint Chartered Institute of Taxation and Institute of Fiscal Studies events exploring topical tax issues. This is the first such event to be online, and if registrations are to be believed, it will have a record attendance. Amongst our panel this afternoon, we have two politicians who achieved prominence in their parties, one reaching the cabinet, the other the shadow cabinet. Both acquired the respect of the tax and business communities. But by the general election of 2019, both were estranged from their parties and fought their seats under new banners. And all that happened in times we now describe as normal. Our subject is tax in the 2010s. So let us recall 2010, a time when the main concern in the UK over the taxation of multinational companies was whether the system was too tight and uncompetitive, and was forcing companies to move their headquarters abroad. It was a time when the gig economy was still in its infancy, with Uber and Deliveroo both still a few years from appearing on our streets. And it was a time when social media, though well established, was still seen as a way for friends to communicate rather than a way to win elections. Our panel will guide us through what happened in tax in the 10 years following 2010. Each panel member will speak for around 10 minutes, and then there will be a question and answer session. To ask a question, you can use the Slido app. If you haven't already done so, please log on to slido.com and enter event code 8321. I will introduce the panel as we go along. First, we will hear from Stuart Adam of the Institute of Fiscal Studies, where he has worked since 2001. Stuart holds a BA from Oxford and an MSc from the LSE. He is a senior research economist at the IFS and focuses on the design of the tax and benefit system from a direct tax perspective. He'll be very familiar to those of you who are regulars at these events, and he is well known for his writings on the tax and benefit landscape. Stuart, over to you. Stuart, I think you need to unmute.
Sorry about that, everyone. Let me try again. Share my screen so that you can hopefully see the slides that I'm presenting. So in these first 10 minutes or so, I'm going to just give an overview of what happened to the tax system over the 2010s and pick out some what I see as the key themes. Tax revenue was surprisingly stable over the decade, with the tax take about a third of national income at the end of the decade, almost exactly the same as it was at the start. And to put that in a longer historical context, that's pretty high by historical standards, certainly not unprecedented, but perhaps more unusual is that degree of stability. That stability in the total tax take doesn't mean that the government didn't do anything to the tax system. Overall, there was a net tax rise of about 1% of national income. That's about £20 billion. So the tax take would have been lower at the end of the decade than at the start of the decade if it weren't for those measures. Now, that £20 billion of net tax rises is the difference between just over £100 billion of increases and over £80 billion of tax cuts. And if we split that up by Parliament, actually we see that most of the measures, both increases and reductions, happened in the first half of the decade under the coalition government, although the biggest net tax rise happened in the short Parliament from 2015 to 2017. What were those tax rises and tax cuts? Well, if I just pick out the biggest ones to give a flavour, we saw increases in the rates of VAT and national insurance contributions, big reductions to the amount that you can save in a pension, a stream of anti-avoidance and anti-evasion measures, one that's perhaps overlooked sometimes, the change from indexing tax thresholds in line with RPI inflation to CPI inflation, which is not often talked about, but an important change that has an ever bigger effect as time goes on. But actually, most of the tax rise was none of these things. It was a whole succession of smaller measures. On the tax cuts side, really the priority was three big headline tax cuts that were pursued steadily throughout the decade: an increase in the tax-free personal allowance in income tax, a reduction in the headline rate of corporation tax, and a freeze, that is, successive real terms cuts in fuel duties. And taking these changes overall, the net effect was really higher taxes for the richest and the poorest, but lower taxes for middle-income households. But one thing that's striking about this set of reforms is that they're mostly just changes to the tax rates. And I think that has been a theme of policy in the last decade, that the main changes have been to put rates up and other rates down, but leave long-standing problems with the tax base unaddressed. So I won't go through a full wish list of what I would like to see for all the main taxes, but there are problems with lack of integration of income tax and national insurance, problems with the VAT base, a debt bias in corporation tax, problems with business rates, inheritance tax, and so on. Most of those problems have really not had much done to address them. But perhaps more interesting is if we focus on those things that we'd have said in 2010 were growing challenges for the coming decade as it was then and beyond, very little's been done on those either. And those things that were rising long-term challenges are still the same challenges we face now. So council tax valuations were already 20 years out of date, or almost 20 years out of date in 2010. They're now approaching 30 years out of date, with still no idea of whether we're going to reach 50 years or 100 years of still using 1991 prices to 1991 property values to levy council tax. Fuel duties have been successively frozen, but with no real indication of how motoring should be taxed in the long term, given the switch that's just starting toward low emission, particularly electric vehicles. There's been bits and pieces on climate change, but a lack of anything systematic. We still have wildly different effective taxes on emissions from different sources, despite the growing need to tackle climate change. The problem that Glyn mentioned of the gig economy and more broadly different taxation according to the legal form in which people work has only become bigger, hasn't been properly addressed, and the increasing reliance on a small number of taxpayers to deliver the vast majority of revenue and the vulnerability that creates has become even greater. So the big forward-looking challenges in 2010 are now even bigger forward-looking challenges in 2020. One that I haven't mentioned there is international issues, and I have somewhat more sympathy with the governments of the last 10 years on that, because the nature of international issues is that they're harder to tackle unilaterally. And so the UK has been a participant in the base erosion and profit shifting initiative. There has been some progress on that, albeit within limits. In different countries has, I think, been a notable success of the last 10 years. But I think what this speaks to is a definite prioritization of some areas over others, but not really much of a long-term strategic where the tax system should be going. And that shows up partly when we see a kind of a pattern of tinkering and frequent change. It's most striking where you get changes of direction, as we've seen with entrepreneurs relief. You look at the number of changes to the annual investment allowance or the bank levy. But even where the direction of change has been consistent, we've had a series of ad hoc increases in insurance premium tax, reductions in fuel duties, without ever really a statement of what we think the long term should look like for these taxes. What is the right level at which we should be taxing insurance or fuel, for example? Business rates, for all its flaws, did have the advantage of being a tax that was almost untouched, was almost completely stable for a 20-year period until 2010. It's now become a tax that seems to be reformed pretty much every year. A second symptom of a lack of clear strategic vision, I think, is complexity. Now, it's often said, and I think rightly said, that the biggest source of complexity in the tax system is change. And so this pattern of frequent change and lots of little announcements is in itself a source of complexity. But even if we compare the tax system at the end of the decade with the tax system at the start of the decade, there's been a whole raft of new taxes introduced, from the apprenticeship levy to the digital services tax. There's been more differentiation in existing taxes. So income taxes had things like the marriage allowance, the withdrawal of child benefit from high income households through the tax system, the complication of the way that pensions are taxed. For those that remember the issue that we've had recently with doctors in the headlines. But more broadly, you look across the tax system and there have been more different rates, different allowance introduced in different taxes right across the board. Another sense in which the system has become more complicated is simply that it now varies more across the UK. We've had devolution of more tax powers to Scotland, Wales and Northern Ireland, and council tax reductions for low-income households now vary across every local authority in England. Now, I'm not saying that all of these things are a bad thing. You can certainly make a strong case for some of them, although possibly not others. But I think despite the fact that there have been some changes in the other direction, clearly lots of people have been taken out of income tax altogether. Corporation tax no longer has a separate small companies rate, for example. I think it would be hard to argue that the goal of simplifying the tax system has been achieved over the past 10 years. I've been talking so far about tax policy, the rates and thresholds and the tax base. There have been important changes to the way that tax policy is delivered and the beginnings, at least, of much more recognition of the online and digital world. Things like the introduction of real-time information, personal tax accounts, the start of making tax digital, are steps towards more like where a modern tax system ought to be, and they come to be seen as major steps forward in the years to come. Finally, I wanted to flag some changes to the way that tax policy is made, particularly early on in the decade. There was quite a lot of change to the policy-making process. We saw the setting up of the Office for Budget Responsibility and the Office of Tax Simplification. There have been a pattern of somewhat better consultation, more transparency. One notable success was the Corporate Tax Roadmap in 2010, which really did set out a direction of travel for corporation tax that was then followed through. All of these things, I think, were clear improvements. A caveat to that is that those are all things that happened very early on in the Parliament and where progress hadn't really been followed through and in some cases has perhaps slipped back slightly. We hoped that the Corporate Tax Roadmap will be the start of many such things, and really it's been the only one. A positive development more recently, at least in principle, has been the move to having a single fiscal event each year, rather than a budget and an autumn or spring statement that is another budget in all but name. Now, in practice, that hasn't entirely happened, but I think that's despite the government's best intentions. That's just circumstances intervening. But it's to be hoped that in future this might lead to a bit less hyperactivity in tax policy. The other big change, of course, of the way that tax policy is made is, as I mentioned already, much less of it is now made in Westminster and Whitehall. And again, an important change to taxation over the last 10 years is just that more of it is the responsibility of the Scottish, Welsh and Northern Irish governments. So just to sum up that whistle-stop tour, governments over the last 10 years have found room for their priority tax cuts, particularly those three, the personal allowance, corporation tax headline rates and fuel duties, within what's actually been an overall tax-raising set of measures. The changes have mostly been to tax rates, really missing an opportunity to address long-standing inefficiencies in the tax structure, and those important challenges that are becoming ever more urgent have been neglected and really have become even more urgent and even more needing addressing than they were 10 years ago. There have been some improvements in institutional arrangements, things like setting up the Office for Budget Responsibility, moving to a single fiscal event, but the fact that we've still seen a pattern of frequent tinkering and rising complexity is not encouraging in that respect. It's also striking that I think I'd probably have said the same thing if we held this event 10 years ago and looked at the 2000s, was also a decade of tinkering and rising complexity. And that points toward problems not just with a particular government's decisions, but problems with the way that tax policy is made and the difficulty or the failure to adopt a strategic approach to coherent long-run policy. So I'll stop there now, hand over to Glyn, and can move on to the next speakers.
Thank you very much, Stuart, for that excellent introduction to this afternoon. David Gauke will now give us his perspective. David was responsible for tax policy for much of the decade as a senior member of the government Treasury team before becoming Secretary of State for Work and Pensions and then Lord Chancellor. Last year, he became the founding member of the Gaukewood Squad when he resigned over disagreements with Boris Johnson on Brexit policy. Since leaving Parliament last December, he has joined Macfarlane's as head of public policy. But notwithstanding the withdrawal of the Tory whip by Boris Johnson, he continues to contribute to the Conservative Home website. David, over to you.
Well, thank you, Glenn, and great pleasure to be here. And can I thank Stuart for that excellent introduction, although it did feel as if sort of 6 years of my life was being assessed very closely, and pluses and minuses. So let me try to address a few of those points. Perhaps if I can start by just putting the context that was in place in 2010 when the coalition government was formed. And essentially that we had three objectives in terms of tax policy at the highest level. First was there was a need to make a contribution towards bringing the deficit down. It was at a peacetime record. Spending took most of the strain, but nonetheless, tax had to make a contribution. As Stuart said, taxes rose overall across the period. Secondly, we wanted to use the tax system to ensure that we had strong growth in the economy, that the after effects of the financial crash meant that we were in a period of low growth. We will then have the Eurozone crisis. And as Glenn, you said in the introduction, there was a view that we were losing multinational companies from the UK. Activities were being moved outside because we were no longer competitive. So we wanted to do something about that. And then the third point, and this is my, to some extent, my defense to some of the very fair criticisms that Stuart has just made, we needed to maintain public support. And that was never going to be easy, but we had to take steps to ensure that the country came with us. All politicians, all governments need to do that, but particularly at a time when we were introducing some tough measures when it comes to the public finances as a whole. I want to just sort of run through very briefly, given the time available, some of the how that approach or how those objectives applied in particular areas. So starting with personal taxation, the big policy on personal taxation throughout that period of time was on the personal allowance, in which we saw very substantial increases. It was Lib Dem demand, if you like, in terms of the coalition agreement. It was in their manifesto, but actually it was one in which the Conservative part of the coalition was perfectly happy to proceed with, and that proved to be very expensive. It lifted a lot of people out of the income tax system. It was broadly progressive, although I recognise the arguments that are made that you could do more progressive things than that, but nonetheless, it did help in terms of the income tax burden on some of the lowest earners in this country, and demonstrated a kind of commitment to ensure that everybody was able to benefit from the measures that we were taking. At the same time, from 2012, the big area of controversy was the cut in the 50p rate of income tax, and Chris and I used to debate this endlessly. In truth, it didn't cost very much money. The 50p rate wasn't raising very much by way of revenue, and at the top end there were much bigger contributions that were made by higher earners. If one looks at the changes made to pensions tax relief and some of the changes made to CGT, I think if you look at what we did on personal taxes, it was a pretty progressive agenda. The next area I'd look at is corporate tax reform, and that has to be viewed from the perspective of wanting to show that the UK was open for business, that we were able to attract business here. And as you've heard, we set out the corporate tax roadmap. I think that was very, very well received. That provided a degree of certainty and stability within the tax system. If anything, we over-delivered on it. We cut corporation tax more than we promised we would do in the CT roadmap. I think we made some other sensible reforms. We were losing headquarters of companies were moving out of the country because of the CFC regime. We made some necessary reform to the CFC regime that transformed how the UK was viewed. I used to spend quite a lot of time traveling to the US, talking to businesses about US businesses as to where they located their European headquarters, and the UK was seen as increasingly attractive, and we were starting to see businesses locate their headquarters here in a way that simply hadn't happened before. I think in truth, to get the real benefit of corporation tax reform, you need to sustain it over a long period of time. I think we were beginning to see the benefits of it by 2014. We were seeing more activity come here, but I think perhaps uncertainties over Brexit, perhaps uncertainties over Jeremy Corbyn means that I don't think we've achieved the full dividend, if you like, from those changes. But do I think they were the right thing to do? Did that change the way that the UK was viewed? I think it did, fundamentally. I also want to touch on avoidance and evasion. And when we came to office, this was not particularly at the forefront of the public's mind. But we did take a view early on that in a period of, if you like, austerity, the sense that those who weren't paying their fair share, those who were ducking their responsibilities, were taking a free ride. And from the beginning, we were keen to address this. And there were a number of steps we took at pretty well every budget and, dare say, autumn statement as well. We would have a big avoidance and evasion package. We would strengthen Hmrc's capability at a practical level. We would make changes to the law to address all sorts of areas, some of which proved to be quite controversial, but nonetheless, and continue to be controversial, but I would argue were necessary. We introduced the general anti-abuse rule, and at an international level, as you've heard, there was a lot done, and the UK, in truth, really led the way on this. The whole BEPS process was to a large extent initiated within the Treasury and pushed by David Cameron and George Osborne at the G20 and elsewhere. When it comes to automatic exchange of information, the level of progress that was made in this decade, I think, was much greater than any of us, including myself, would have expected in 2010. And the UK played a really important role working with the Crown dependencies and the overseas territories to make sure that they played their part which actually, to the surprise of many, they did. And one could also look at registers of beneficial ownership. There is much more coordination between tax authorities now than was the case in the past. Now, of course, attitudes did change a great deal, and a lot of the criticisms about avoidance were, in fact, about people acting within, in truth, businesses acting within the tax system as it was designed. A lot of the problems, in my view, caused by a dysfunctional US tax system that enabled US companies to get away with not paying the tax that they should have been paying in the US. But the UK, I think, responded to that, and despite a lot of the criticism in this area, I think we've got a very good record on avoidance and evasion. I'm really glad Stuart raised some of the practical points about Hmrc, real-time information, making tax digital, personal online accounts. They were, for me personally, very important matters, and I, as a minister, I was very keen to progress all of those. And I can't help wonder that, you know, without real-time information, I can only assume that the government's current furloughing scheme, that is so important to so many people, just simply wouldn't be possible without the reforms that we initiated in 2010, notwithstanding some resistance within Hmrc to a lot of these areas. We felt it was important that the capacity to collect tax in a modern way was necessary. And when it comes to simplification, not so much of the law or of the structure of the tax system, but when it comes to the experience of the taxpayer, I think one thing that we found was that it was much easier to make progress through some of those administrative and technical changes than it is to deal with the policy areas. And that brings me to these sort of structural changes that Stuart highlights, where I would have to accept we didn't make the progress that I would have liked us to have done. I think establishing the OTS was a very good thing to do. I think there was an excellent work done by the OTS, initially with John Whiting as the technical director and Michael Jack as the chair. And I think that is a force for good and puts pressure on government and highlights where progress needs to be made. But this proves to be a very difficult problem. Getting through reforms that make the tax system more logical, more coherent, can be very difficult. And I speak as someone who has gone through that experience more than once. And you run into difficulties. Complexity in the tax system tends to involve some winners and some losers. You try to get rid of that complexity. The winners are silent. Those who lose out tend to make a lot of noise. There were areas where we added to the complexity, there's no doubt about it, and Stuart's highlighted some of them, largely to meet other objectives about the tax system, to make it better targeted or fairer, or find ways of doing that. But we can spend more time on this. But one of the experiences I certainly learned, one of the lessons I learned in my time in the Treasury, is just how difficult it is to simplify tax law in this area. There were areas where we made progress that can get forgotten. We got rid of age-related allowances in the income tax system. We've moved SDLT from a slab system to a slice system, which was a long-standing flaw within our tax system. But did we deal with all the sort of structural challenges, the way that people have performing essentially the same activities but through different form are taxed differently? No, we didn't. And I hope that there can be a way in which we can deliver sensible tax reform that addresses many of the points that Stuart has set out. But if we come back to those three objectives, if you like, yes, a contribution to our tax system was made, but from the tax system to restoring the strength of the public finances. I think we ended up with a much more competitive corporate tax system that is good for the UK economy. I don't think we've had the full benefits of that yet by any means, but I think that was an important contribution to what we were doing. And on the third point, did we maintain public support? Well, if you look at the general election result in 2015 and 2017, the Conservative Party succeeded, and indeed in 2019, although I have slightly mixed feelings about that one, nonetheless, through a period of unprecedented austerity, if you like, a tightening of the public finances, we ended up with the main party of that government being re-elected and remaining in government. So that suggests we did maintain a degree of public support. By no means a perfect record, but I think given the inheritance that we had, given the challenges that we faced, by and large, we left the decade with a better tax system than we started it with.
Thank you very much, David. It's now over to Chris Leslie to respond. Chris had a number of ministerial positions in the Labour government preceding the one David has just been discussing, but he spent much of the decade of the 2010s on the other side of the dispatch box from David, rising to become Shadow Chancellor in Harriet Harman's caretaker administration. However, on the election of Jeremy Corbyn to the Labour leadership, he resigned from the front bench. I think there's something of a theme here this afternoon. Unlike David, he didn't need to have the party whip taken off him, as he actually resigned from Labour in February 2019 to form the Independent Group for Change. He also left Parliament in December 2019, and he is the author of Redesigning Regionalism, Leadership and Accountability in England's Regions. Chris, your turn to respond.
Very good. Thank you very much, Glyn, and thank you, Stuart and David. I think you've actually covered a lot of the piece very well. And as I sort of look out on this beautiful summer's day, it reminds me very much of a decade spent, maybe not like David actually making decisions, but sitting usually opposite him, more often than not, Committee Room 10 in the committee corridor of the Houses of Parliament, sweltering weather, and poring over, as the opposition is supposed to do, every line item detail clause of, I think we probably got up to about a dozen finance bills during the course of that decade. So warm feelings, literally, as I sort of boil here. I mean, I think you covered off the detail, but also started to go through some of the politics quite well. And if you try and take disassociate your own position at the time, was quite a moment coming in 2010 with that coalition agreement. I mean, in a sense, a lot of those tax issues were settled in that coalition agreement period, and they were then rolled out over the subsequent next couple of years. And particularly, as David and Stuart were mentioning, in terms of income tax strategy, I suppose the top line, a lot of the public would see what was happening with the personal allowance, and that was undoubtedly a massive shift from something like 6,500 of tax-free income to nearly 12,000 now. So I mean, that was definitely of great significance. But you can never detach the politics from all of this stuff, as David was saying. And I mean, that post-financial crisis era definitely set the tone for all that we did, sparring with the government on item by item after item, either challenging their priorities. And that was certainly the case with the reduction of the 50p top rate to 45p in 2012. That became, as David was saying, quite a symbolic discussion rather than necessarily a make or break for the entirety of the public finances. And that whole period, there was certainly a commitment at the top of government and cover given really for a lot. Because of the financial crisis. It was a narrative that pervaded quite a lot. And as has been said, most of the burden was carried on expenditure in terms of DEL reductions, I think down from 24% of national income to about sort of 18%. It was really significant over that period. And that was where the burden was kept. Hence, the tax take from taxation relatively stable. But I think it was very difficult to disassociate that political environment from some of the micro details that took place. I think the compositional issues become quite interesting over those sort of the years straight after the government came in. that commitment on income tax wasn't necessarily there with national insurance, whether that's because national insurance is a complex tax that the public don't necessarily grapple with as immediately as a sort of basic rates and higher rates. Certainly that wasn't quite as generous a giveaway. And obviously, from an opposition point of view, we highlighted what we regarded as a more regressive set of choices in terms of the shift of VAT up to 20%. And of course, that was an issue that gave a big chunk of revenue to the Exchequer at the outset, which allowed some of those other changes on personal allowance to come in. Of course, there were attempts by the government occasionally on indirect taxation, on VAT, to slightly tweak with the scope. We had great fun in opposition with the caravan tax, the pasty tax. You'll remember all sorts of stunts of us and the shadow team in Greg's, bemoaning what would happen to our sausage rolls and so forth. And those were attempts to do that. And in fact, in time, they burned so much politically that future manifestos committed not just to keep income tax and national insurance rates low, but also to retain the scope of VAT. Now, you could argue, well, is that necessarily a sensible thing? But that is the nature of the politics there. The other big changes were, as David was saying, definitely on corporation tax, a really steep reduction. And I think we can see now we've pretty much hit the baseline of that, and in fact seen a reversal from that 17% level as it's got to it. But I have a great memory of spending a lot of time on the bank levy, and in the post-financial crisis era, sort of talking about were the banks, because they were pinned with responsibility for the circumstances we're in, were they paying their fair share, lifting and making that reparation in the right way? And David and I spent a lot of time arguing over minutiae. Was the rate the right level? It got incredibly complicated, very impenetrable for anybody to quite see how it was set, and possibly for good political reasons. I think it was fairly high, and I suspect the sector definitely made plenty of representations, put it like that way, to the Treasury. And then it was tweaked to the bank surcharge and the special corporation tax rates and so forth. But that, I suspect, a lot of political energy was spent in the Treasury, certainly was from an opposition point of view, on the bank levy. I mean, we'll come to talk about where we are today and lessons learned, but there isn't quite a sector that was under the spotlight as much as the banking sector in that immediate aftermath of the financial crisis. There were other areas, as you've pointed out, in terms of political heat. The fuel duty reduction, or rather the sort of deferral of the uprating time and time again, actually, I don't think was coming so much from the opposition. I think a lot of it was from the Conservative backbenchers themselves. And I still think that is there. It is a sort of political shibboleth there. Although personally, I think we're getting to the point where that is sort of petering out, and especially as oil is, prices are so low. So I suspect that might come back onto the agenda there. But in terms of other areas, property taxation, I thought, and capital taxes, they did rise quite considerably over the period. Again, coalition agreement, I'm not sure the Conservatives would have themselves gone up to capital gains tax 28% without the coalition agreement as it was there. But that was quite a significant increase. And there were other sort of changes in terms of big wadges taken from some of the minor taxes, stamp duty, land tax, up and up and up it went in a very jagged way, actually. The design was hardly a sort of smooth area, and lots of criticism about cliff edges at different levels as it's designed. That still is a problem. You add on to that some of the buy-to-let reduction of interest reliefs, second home taxes, and even on council tax. The government's certainly very sensitive. I mean, as you were saying, Stuart, no revaluations other than back from 1991, but nevertheless, this sort of pegging it at 3% increases year on year, and then of course the social care surcharge, those things have allowed council tax to become, I think, quite a big political issue again for many people. And I doubt the government has much leeway to go further on council tax. But as you say, on business rates, a strong lobby. Lots of interest groups, small business groups in particular, were forcing the pace of change. So there was almost that response each year. Every budget, you knew there would be a change, a tweak on business rates as they came through. But I guess the other interesting areas were those new taxes. What could be introduced under the cover of political acceptance that would make it hard for the opposition to sort of claim that this was either a betrayal of a promise or was going to be particularly harmful. And I guess, the apprenticeship levy certainly was very difficult for an opposition party to oppose that, given that it was hypothecated directly to a sort of social good in skills terms. Later on, I think George Osborne got interested certainly in sugar tax, into the soft drinks levy. Again, public health reasons, it was difficult. I think that, finding those areas where there was a sort of level of consensus, very difficult to criticize those, and that was there. And we also had that, you're not doing enough on avoidance. Oh yes, we are. You're not doing enough on avoidance. And David's right. I mean, it was chipping away. We found certainly after my time, the opposition would tend to rest a lot of its spending commitments on, avoidance is where we will go for these things. But actually, if you can get $1 billion a year in tightening up, you're doing pretty well. And that is it's an annual process. And the technological changes undoubtedly shaped what happened in that period from 2010, because as David was saying, a lot of the digital processes, the real-time information, made that happen. I mean, there were still big cock-ups in terms of the administration of these things. I mean, universal credit as it was coming along, I know that's not quite in the tax system, but it is in some respects. Lots of problems with the introduction of that, and as an opposition we made quite a lot of points about competence in those things. But and there were other changes that I think the government towards the end, there was an attempt to try and tighten up, and revenue was short. I think the fiscal rules as they were set at the outset never quite managed to sustain themselves over that 10-year period. They were changed, I think, a couple of times over that time, because as we were arguing, simply putting all the burden for deficit repair onto expenditure was never really going to be able to do it, because it did stunt our growth over that period, and we had pretty anemic performance for quite a long time. Hence the need to constantly try and tweak in terms of revenue closing with things that again were a little bit more politically saleable. So the higher rate charge for child benefit, for example, or the suspending the personal allowance over £100,000. Some of those changes, again, through the prism of what can we put through that the government felt was acceptable, but was difficult for the opposition to criticize. And so I think that Osborne was pretty smart at having a nose for these things after being burnt in those early years. I think that experience of things like caravan tax and pasty tax taught him a very strong lesson of caution in the latter part of the decade, and that's where it went. So yeah, I mean, I don't think you can dissociate the politics from a lot of the choices that have been made. Yes, there were a lot of good technical changes and advice that was given in, but that period saw a chancellor who was intensely political, was boxing off the opposition very frequently, but it was from the position of sort of trying to repair the deficit by and large. I think a lot of this has been knocked off course, obviously, by the Brexit situation, let alone the even bigger situation we're in now. So we're into a completely different era.
Very much, Chris. Thank you. I'm sure we'll come back to some of those points that you and David have just been debating during the questions. But our final speaker for this afternoon is Jane Mccormack. Jane is the global head of tax for KPMG, and was previously head of tax and pensions for KPMG in the UK. During the last decade, Jane and KPMG sought on a number of occasions to build bridges between multinational companies and the critics of their tax affairs. And Jane was an early advocate of greater voluntary transparency around tax matters by larger companies. That was a challenge to tax directors like myself, who for most of our careers up to that point had struggled to interest the person at the next desk to us in the tax affairs of our companies, let alone the general public. Jane is a regular conference host, presenter and moderator, and has been featured in the Financial Times and other media around the world. Jane, your turn.
Thank you very much, Glyn. So obviously I'm bringing very much a business perspective to all of this, but find myself agreeing with a lot of what the previous speakers have said. And in particular, if we look back to what went well, what went less well over the last decade, I think my perception is we started the decade in pretty good shape, in that there was good engagement between government and business. And that led to real improvements in both tax administration and tax policy. If you think about tax administration, we'd moved into the period of cooperative compliance. And what we saw there was a whole backlog of issues being resolved and things being talked about in a real-time way. And that led to much greater certainty, both for business and for government as a result. And all business will tell you that certainty is probably the number one thing on the wish list when it comes to tax. And then in relation to tax policy, well, we have the corporate tax roadmap, and thank you very much, David, for that. Those were halcyon days, because things were being done, measures were being made that did have a real measurable impact on business. We could actually see the impact on investment in the UK and on employment as a result of those measures. And for some time, we actually knew which direction we were travelling in, which was fantastic. Then another great achievement of the decade is in relation to tax evasion. And there is no doubt that the UK took a really important leading position on the international effort to stamp out tax evasion. And 10 years ago, I don't think anyone would believe that we have pretty much seen the end of bank secrecy now. And with automatic exchange of information, registers of beneficial ownership being almost completely adopted across the world, almost, not quite yet. And then we move on to tax avoidance. Well, in my view, the UK did well on effective and proportionate anti-avoidance legislation. DOTAS predated this decade, but I think DOTAS and the GAAR, which does indeed operate as it was designed to do, as a bit of an electric fence, keeping people well away from the unwanted territory. I think those have been very effective in cutting off the demand for aggressive tax planning. And I actually think that has been of benefit to responsible business and their advisors, as well as to government. In that regard, I'll also mention this relates to something that what Glyn just said, really, because I think the measure requiring companies to publish their tax strategy was also a masterstroke, because that forced businesses to think about tax as part of their corporate governance, and it took it out of the tax department and into the boardroom, which is where I believe it should be. And then finally, the thing that I will mention is the founding of the Office of Tax Simplification, which I think was exactly 10 years ago, which I think has done some good work and acts, if you like, as the conscience, at least, of the legislators. But frankly, the work they've got to do is a bit like trying to empty a sink with a fork when the tap is still running. And frankly, the tax legislation, I always say now, is a joke on aging tax advisors. We have no chance of keeping up. And something really does need to be done to stop this constant tinkering, as has been said, adding complexity to complexity. I was discussing with a colleague the other day in relation to some of the financial instruments legislation, that one wades through 100 pages of legislation to arrive at the answer that you follow the accounting treatment, which always disappoints clients when it's as simple as that through such complexity. So those are some things that have gone well, I think. But what has gone less well, and this dates really from not far after the beginning of the decade, is that I believe there's been an erosion of trust in the tax system as a result of various things. The first thing is, despite some of the very good policy measures that did make tax more progressive, these cliff edges and anomalies in the system still result in people thinking of the tax system as being unfair in many regards. And obviously very relevant to me, one particular area of unfairness that people talk about is a perception that's been allowed to grow that tax policies that are aimed at stimulating investment are sops to the rich, or some kind of conspiracy between government and big business. And you contrast the way people talk about this in this country with the way they do in Ireland, for example, where there's a strong public understanding of how their tax policy has supported investment and growth in that country. Related to this, but with perhaps different causes, there's also a narrative that has been built up that says that big international business is really made up of a population of what is referred to as tax dodgers. Now, this isn't to say that there hasn't been some behaviour, at least in the past, that we shouldn't regard as acceptable now. But this narrative really does not chime with my experience. And as I say, anti-avoidance measures and the like that have been introduced did the job that they were required to do. And actually, I think there's a lot of deep thought and responsible behaviour in business about this. But this narrative is so widespread that it crops up in the sets of stand-up comedians and in casual comments made to me by my hairdresser. And that has contributed to a lack of trust in business. And the other thing about that narrative is that it's fed through to views about Hmrc. And very incorrectly, I believe, a sort of narrative that says that Hmrc is somehow not competent to deal with these tax dodgers who are running rings around them. This narrative has continued. I think it has got better in recent years, but it's still there, and it's had some real implications. I think it's led to a reduction in the interaction between policymakers and business and taxpayer representative groups, which has meant that policy is sometimes less effective than it could have been if that consultation had happened. The second thing is it has led to more difficult relationships between Hmrc and taxpayers, and a slowdown in the pace in which issues are dealt with, and therefore an increase in uncertainty. Sometimes in policy, we've ended up with a sort of ends justify the means approach. And the two things I'll mention here is the use of retrospective legislation, or legislation that is in effect retrospective, which I feel strongly it never helps support an understanding of the rule of law, and erodes trust in the UK system, not just in the UK, but on the part of international investors. And the other one is the use of unilateral measures, which can disrupt international consensus and increase barriers to trade. And then finally, on my topic of transparency, which, as Glyn said, is an area I've been talking about for a long time, I think some of this has actually held back transparency by some businesses, at least. And I do believe that transparency is desirable, not least to further public understanding of the system. But there is sometimes a fear that by releasing information, what is said will be misrepresented and misused, and there are real examples of that having happened. So that sounds quite gloomy. As I say, I think things are getting better at the moment. But in the wake of COVID-19, it does seem to me to be extremely important that all stakeholders involved in this do work together to try and restore greater trust through collaboration, better explanation and transparency. The fact of the matter is that the tax system is going to be part of the heavy lift that government's going to have to do to hopefully recover from this crisis. And they're going to have a really difficult balancing act to do between tax measures which don't impede and indeed facilitate business investment, growth, employment, whilst at the same time collecting the revenues that are going to be so badly needed. And I just don't think there should be left to government alone. I think all stakeholders, whether it's taxpayers, academics, professional organisations, all have a role to play in discussing how policy should change and how we should take what many see as an opportunity to actually start thinking about some of those more radical changes to the system that were not followed through in the last decade.
Thank you very much, Jane. Just before we go to sort of Q&A, if I'll try and sum up a little bit of that. What I'm taking from that is during the decade, there were some what I would call, there were some changes, there were some achievements. So whether you agree with it or not, corporation tax was reduced and the personal allowance was increased, as Stuart pointed out right at the very beginning. And those were quite fundamental changes in terms of the tax collection mechanism in the UK. There were achievements. I think Chris was accepting that there were achievements around anti-avoidance and evasion measures, which also Jane has said, but with the realization that that can only get you so far. But there were some real gains and some real achievements in pushing avoidance and evasion out of our system. However, the system started the decade with a lot of complexity and structural flaws, and it ended the decade with at least as much complexity, if not more, and many of the same structural flaws. And that may be part of the reason that for the lack of trust in both Hmrc and perhaps in business that Jane has observed. So some good things, but some underlying problems that we had at the beginning were not resolved. So now we'll go to question and answers, and I'm going to pick up first on so where Jane was leading us towards the end of her presentation, which is, what are the lessons to be learned from what happened in the 2010s and the financial crisis at the beginning of that decade, or just prior to that decade? What are the lessons to be learned from then for now as we exit the COVID pandemic?
Shall I start on that? I would. I mean, the first point to make is I think that for tax policy, it's going to be even more challenging over the next few years than it was for those of us in office after 2010, because you're still going to be faced with the same objectives that I set out earlier. You're going to have to fix the public finances. You're going to have to get the economy growing, and you're going to have to maintain public support. But this time round, I don't think that you can go to spending in the way that we did at the beginning of the decade. I think tax is going to, as Jane said, tax is going to have to do more of the heavy lifting. So that is really challenging. I think lessons learned from the 2010 period, if you can do this in a planned and predictable way, I think the corporate tax roadmap was a very good thing. To the extent that you can set out a strategy and sell that to the public, if you can do that, that's a huge bonus, I think. I think the second point I would make is that some taxes are more growth damaging than others. And if we are serious about the economy growing, we are going to have to face up to some of the real trade-offs that exist here. That just because a tax is going to be popular doesn't necessarily mean that it's the right thing to do. I very much again share Jane's concern that anything that is seen to be done that is good for encouraging investment is seen as being favouring the rich. The benefit of investment should be distributed to the entire country. And there are things that have to be done in order to demonstrate that happens. But we have got to have a view of our tax system that identifies which things are most damaging, which are the biggest impediments to us growing and economically succeeding, and which ones aren't. And in broad terms, taxing consumption and taxing property is less damaging than taxing income and taxing investment. And I think there was a lesson. That was to some extent the approach that we took in government. I think that has to be the right approach.
Chris, right of reply?
No, I would agree with much of that. I think it is very different this time round. I mean, not just in terms of scale, but politically, it was possible for even the government of the day to pin the financial crisis on the banking sector and use that as a sort of whipping boy in a way as a basis for talking about a tax strategy thereafter. I mean, really now, who are the bad guys in this particular period of time? It's not clear at all who they would be. I suppose, in fact, the FT did an interesting sort of double-page spread this past week of all of those firms who, since the beginning of this calendar year, had grown considerably despite the pandemic. So you can see, obviously, it's the Amazons and the techs, but there's a lot of some of the retail sector who've done quite well. Maybe where they haven't suspended their dividends. Maybe where they've even started paying back the furlough money. I can imagine a time, not immediately, but this time next year, where it starts to be reported that company X has been, changing its executive pay strategy in this particular way, but took furlough money of this scale. And whether there is some clawback on that, I could see that possibly coming along. But in broader macro terms about the strategy, the choices, I mean, I don't think there is an appetite for expenditure to bear the burden of it this time. And that makes this really, really hard. I think probably if you were going to say what were the lessons for the last 10 years, I would actually say apprenticeship levy, soft drinks tax. How did those sort of sail through? Well, the hypothecation element made the big difference. And I mean, I would put money on the fact that there is, going to be something hypothecated for NHS and social care expenditure or increases in the budget that comes in the autumn. Where that actually falls in particular, maybe you could get away with an extra penny on a main rate. I mean, don't forget 2/3 of revenue come from those big ones of VAT, national insurance and income tax. So, but again, there are manifesto commitments there too. The Labour Party is certainly, from an opposition point of view, also not going to tolerate expenditure cuts. So they may be willing to give grace in terms of a tax increase strategy in certain particular direction. But no, I think those in sort of high wealth, high earner brackets are quite prone to some of the strategy for recouping a lot of the expenditure today.
Particularly picking up there on Chris's point about large companies and trust and.
Yeah, well, I think I'll pick up on both of those points. I think what David is saying is really important, and in fact, it's important to any change that you have a plan, that you explain to people what the plan is, and you stick to the plan is really important. And I think in this particular case, part of that plan needs to be the communication and the explanation of why that plan serves the objectives that people will, don't disagree on. And it's those objectives, I mean, we sort of know what they are. It's about getting growth, but it's trying to get growth in a way that reduces inequality. It's probably about getting growth in a way that is more environmentally sustainable. So I think it's all about any changes that are made in policy fitting into that narrative about how does this actually help achieve those public goods. I think we've tended to get backwards and forwards in the debate, and we lose sight of, well, why are we doing this? What is the benefit to society as a result of that change?
Stuart, Do you want to come in on that question?
Yeah, so I want to really go back to what was kind of one of the main themes of what I was saying at the beginning about the importance of having taking a long-term view, having a strategic plan for the tax system. And I think it's worth having that and bearing it in mind as you're making shorter-term policy. So it's quite plausible that in the short term, we might want a tax cut as part of a fiscal stimulus in the short term. In the longer term, we're more likely to want to have tax rises to keep the national debt to a sustainable level. Now, that was a similar story in the last crisis. Last time, the biggest part of the tax cut stimulus was just a cut in the VAT rate, and the biggest tax rise was a rise in the VAT rate. Now, there are worse ways to do stimulus than cutting VAT. There are worse ways to raise revenue than raising VAT. But you could say, well, where do we want the tax system to go? And could we use this as an opportunity to help us get there? So I could give lots of examples of that, but just to pick one, my view on property taxes is that we shouldn't have stamp duties at all, whereas council tax ought to be brought up to date and probably made more proportional to property value. So might one possibility be to say, well, as part of a fiscal stimulus, let's cut stamp duty or even abolish it completely. But rather than saying, and we'll just bring it back and then maybe raise it to raise more revenue, say we'll get rid of stamp duty now, but then in 2 or 3 or whatever it is years' time when we need to start raising more revenue through taxation, we'll introduce a reform of council tax to bring that up to date and possibly raise more revenue through that than we do at the moment. Now that's one example of how you can kind of use the short-term imperatives and what you have to do to achieve longer-term strategic objectives. I could suggest others. The government might have ideas of its own, but actually thinking through how you can get towards long-run objectives rather than just treating each day as it comes would be a lesson I would draw from the last 10 years.
Thank you to all the panel for that. And that sort of really leads into, there's a theme in some of the questions that are coming through is the post-COVID era a time where we can address some of these structural flaws in the system? And it's just touched on council tax, but another one that's being mentioned a lot in the questions is income tax, NIC. Is it time to merge the two systems? Is it time to do something on that self-employed question? And I think the most popular question that's coming through is, what are the thoughts about how some of that 330 billion or so that's been paid out for support is going to be recouped? And I think what you've all just said is probably it's going to be through taxation rather than through spending cuts. But will Hmrc have to be more aggressive? So is there going to be some structural change? And are we going to see some aggression from Hmrc? Jane, would you like to chip in first on that?
Yes, so I mean we've been doing lots of discussing on this, not just in the UK but on an international basis, and there are some countries that are already moving to using, as I say, COVID as an opportunity to look at more fundamental structural change in their tax system. And one of those areas is the shift from, and if you think about digitization as well and how that is changing the economy, is to shift from taxation of employment to taxation of capital. And in relation to wealth taxation, lots of discussion about how ineffective wealth taxes normally are, and everybody seems to be circling back to landing on property taxes. So following on really what Stuart says, not transaction taxes, but property value taxes. So I think that will, that's likely to raise its head all over the world. In terms of Hmrc, well, I think tax authorities worldwide will obviously be focused on making sure that they collect all of the revenues that they should be collecting. I hope that doesn't turn into aggression. I actually think cooperative compliance and proper engagement, with speaking softly, but also carrying a big stick if you need to, is actually going to get you further and collect revenues faster than an adversarial relationship with taxpayers. I think you're on mute.
Sorry. Yeah. Yes. Chris, if I can put this to you, if you were still Shadow Chancellor and the Chancellor came to you and said, Chris, I really want to do something about this problem with self-employment versus employment and the national insurance being different and people paying themselves through personal service companies. Will you, as the opposition, will you join us and support us in making this structural change? Do you think there's an opportunity for that to be done now, or do you think the politics, we're a rerun of the pasty tax all over again?
I think in reality, it's very difficult to get cross-party agreement on any of these things. I mean, there are very few rewards in politics. There should be for cross-party working, for being strategic, for taking that long view, as Jane was saying. But really, mostly, there are downsides to doing so. And there are big rewards for risk aversion. And particularly if oppositions are hungry or feel they're on the brink of getting well, wherever they are, then it's almost baked in that there is a sort of knee-jerk critique of the strategy of the government of the day. I mean, I think that, whilst there aren't the big bad guys like the banks, I suppose, this time round as there were in 2010, 2011 to go after, I think that there will be, there is a sort of acceptance amongst the public that we have to do responsible things. Labour is in difficulties still, particularly over the last 4 years, not quite understanding that, the public want an alternative government to be responsible and show how it can pay for stuff, and that money isn't infinite. I still think they're slowly coming around to that, and so they know that just a sort of knee-jerk critique of everything, or vice versa, promising loads on expenditure isn't going to wash. So I think there will be more of a nod to responsibility. You see that from the sort of new team. But I do think self-employment is the signals have been out there already from the Chancellor that's going to be an area, possibly under the guise of some sort of NICS, income tax harmonisation, merging of regimes. It might be done under that, although that always makes it prone to criticism of some stealth tax change. So I think it's better to be done transparently if there is a change on that. I think it's a pity, in fact, that Rishi Sunak's schemes have left so many falling through the gaps on self-employment, because I think if it had been more generous in the short term, it could have justified a proper reform to this, the anomaly on national insurance in terms of self-employment versus those in employment. But there we are. I actually think the areas where the spotlight in the Treasury is likely to go, again, what are the most politically doable areas? Where do the public find it? Don't really think of it. It is in things like deferred income. So pensions tax relief, I think, will come back onto the horizon. Again, maybe under some sort of unification. So if it goes up a little bit at the basic rate, but higher rate comes down quite considerably, and there's a sort of net yield from that, I can see that as a possibility. I also think the digital tax issue, I mean, yes, there's a big debate. The Americans are saying to Europe and elsewhere, no chance, we'll never do it. And I think even a Biden administration would probably take a sort of similar view, but the necessity will mean, I think, those digital tax changes will come in, because the political imperative is there has to be something. And they've done so well during this pandemic period as well.
Thank you. David, if I can come to you, and in a different world, you are the Chancellor in this scenario. And where are you going to spend your political capital to make structural reform, if at all?
Well, I do think that the case on something on the self-employed is evidently a strong one. I was part of the Treasury team that tried and failed to do something about this in 2017. Relatively modest steps, in truth, given the way that the national insurance contribution system favours the self-employed. But I think perhaps taking a leaf out of Stuart's book here, when Rishi Sunak provided support to the self-employed, he did lay a marker, and you self-employed are getting support here from the taxpayer. I take the point, not everybody, but a lot of the self-employed getting the support. And I suspect the Treasury will want to come back to this. Look, there's a very, very big concern within the Treasury of essentially the tax base being eroded. That as more and more people move from being PAYE employees to being self-employed or paying themselves through dividends, that the tax base is shrinking all the time. So regardless of the current, the COVID situation, I think Treasury would be keen to do something about it. But I think that would be very much a priority area. I think we have to remember here that in terms of raising large sums of money, you basically have to pull the main levers, and whether that is income tax or national insurance contributions or VAT, those are your big tax levers. I don't think, by the way, that the concern the Treasury have will be over the £330 billion that we're borrowing this year. They'll say this is an exceptional year, we just have to treat that as like a war debt. But the concern about the sort of structural deficit that is left as a consequence of the scarring, as a consequence of very substantial spending pressures, I think they will need eventually to put up taxes. I'm not sure that they've necessarily fully accepted that yet, but they will need to do that. And just on your point on income tax and NICS integration, intellectually, there's a very strong case for doing that. I was always attracted to doing something, moving in that direction when I was in the Treasury. But you do run into some issues about who the winners are, who the losers are, that are extraordinarily complex. And there are some surprising, the people who who work seasonally, are affected by this, rather than those who work consistently over 12 months because of the assessment periods. There's all sorts of things that emerge once you start looking at it. But I would make this point: there are some countries that can cope with being high tax countries because they essentially tax in a pretty sensible economic way. They tend to lean quite heavily on consumption taxes. You look at the Scandinavians, they're high tax countries, but they're also open, outward-looking economies. They've got a pretty efficient tax system. And are not that aggressive when it, not anti-business. And I think if we are going to be a high tax country, and we're going to be a higher tax country than we have been before, then we need to make sure that we're not attacking investment. So I think, sorry, to come back to your question, Glyn, I think self-employed is going to be part of it. I suspect they will need to look again at property taxes. There will need to be a contribution at the top end. I'm not sure that a wealth tax is practical, but property taxes, you could do something on that. But there will have to be a broad-based tax increase in which very large numbers of people find themselves paying more in tax.
Stuart, under the IFS has already talked about this. Does that sort of chime with your thinking on what's likely to happen?
Yes, obviously what's likely to happen and what I would like to happen are very different things, as people may have gathered by now. There are places where they coincide. The issue of the self-employed, I would absolutely echo. That's something that a colleague and I are actually doing work on at the moment. And the Chancellor's already indicated that there will be some action there. There are some people who've slipped through the net on there. On the other hand, in some respects, the support for the self-employed during this crisis has been more generous than support for employees. So those that have seen some reduction in their income but haven't been completely wiped out still get a full 80% of their earnings covered. If they're self-employed, they get nothing at all at the moment if they're employees. So there are kind of things going in both directions, but I think it would be nice, and I think it's plausible, to see some action there. I think it's also worth flagging two areas where there are supposed to be fundamental reviews going on as we speak. One is a fundamental review of business rates, and the other is fundamental review of how to get to net zero carbon emissions, both of which are supposed to report by the end of this year. Now, quite how radical and first principles those are really going to be remains to be seen. They could, among other things, suffer from the people doing them getting somewhat distracted by the minor events that are going on at the moment. But I think those are places to keep an eye on where I'm hopeful that there could be some action. I would like to think that if we're talking about, over the next 10 years, a government can't have another decade burying its head in the sand on the future of council tax, burying its head in the sand on the future of fuel duties when there are electric vehicles. I'm less convinced I actually see any sign of anything happening on that, but those are both things where at some point someone's got to do anything because they do something because they're just not sustainable. But quite how anything will happen on those, I think, is much harder to say.
I think what we're hearing there is we probably should expect to see Rishi Sunak follow through on his promise to do something on national insurance and the self-employed. Property taxes looks like another area that is not only ripe for reform, but could well be tackled under various guises. But perhaps the political environment will still make fundamental structural reform a little bit harder than perhaps we all wish it might be. So a question that's come in, which might sort of help with that last point, is: does the panel believe that there should be a non-governmental body involved in taxation to ensure there are long-term taxation objectives for the taxation regime? Perhaps again, I'll go to Jane for her thoughts on whether there should be, I don't know, what will you call that? The Office of
Off-tax,
Policy?
Yeah, off-tax. Yes, because I have that phrase in my head because I've talked about it before. And I think there is something there, actually, and not just, by the way, it's similar conversation at the international level as well, is whether you need, at that level, we call it, the Office of, it's like the World Trade Organization, another WTO, the World Tax Organization. I think there is, and it goes back to my point about multi-stakeholder input here. And, in the discussions that we have when we do multi-stakeholder engagement, you really quickly realize that nobody has all the answers. And you actually need all sorts of expertise to come up with a good tax policy and to monitor that it's working well. You need lawyers, you need tax experts, you need economists, you need people, people who are expert in social behaviour and how people will react to certain stimuli. So I think yes, there is a place for that, because otherwise it's all bilateral discussions between one stakeholder and another.
David, do you think there's a possibility for that, or do you think the Treasury would never wear it?
It's not so much the Treasury. Well, it's partly the Treasury, but it's largely ministers. And look, this is the difficulty, and I face this in my 6 years being the tax minister, 3 years as the shadow tax minister. Is that there's very often a kind of frustration of those within the tax world who are close to these things, who perhaps understand some of the sort of technical detail and so on, and indeed economists who sort of look at what we do with tax policy and say, hold on, this isn't the sensible way of doing it. How can you justify, people paying one set of taxes here and another set of taxes there, and by and large those are criticisms that are absolutely fair and true. But there is also the point that tax is at the heart of politics. It's at the heart of a democracy. You know, taxation without representation. It goes back to that level. And in the end, the people who make decisions on taxation have to be accountable to the public. They have to be able to say, no, we're not prepared to live with that. Now, within that, you can try to create some institutional pressures about the transparency in which you make tax policy and the tax policy making process. You can have an organization like the Office of Tax Simplification that can highlight where there is unnecessary complexity. You can have organizations like the IFS that do a fantastic job in sort of highlighting flaws within the tax system and on occasion applauding steps made in the right direction. But in the end, this does come down to the relationship between the general public and the attitudes that the general public will have, transmitted through parliamentarians and through to a government that is democratically accountable. And sometimes in these discussions, there are sort of ambitions to essentially take tax out of politics, or take the politics out of tax. You can't do that. And in the end, through all its flaws, tax is an inherently political issue, even though the politics very often means that tax policy, to almost anyone who understands it, isn't pursued in the way that perhaps we would like it to be. So I don't think you can have an off tax, but are there ways in which you can make the process and the level of accountability as sympathetic and towards a sensible tax policy? Then let us do that. But one shouldn't be too optimistic or overestimate. There is an easy way of kind of the sort of god of rational tax policy can come down and transform our system. It's just not going to work like that, I'm afraid.
Chris, cross-party support on that? Or David?
No, I think David's right. I mean, it's inherently political, but if you explore that and take it a little bit further, well, where are we with the interests of the political system currently in tax policy? I'm pretty sure Number 10 themselves are not that interested in tax policy. However, you do have a Chancellor of the Exchequer who is ambitious and probably could be in line to take over and is in a fairly stable position. I don't think there's any chance of him being knocked out of the Treasury for quite a while, especially since his predecessor was knocked out of the Treasury. So you've got a Chancellor who's there for the next, could be there for three years plus. In which case, if he is thinking strategically, how, he's done the largesse, he's got the brownie points for giving away stuff. Now he knows he's got ahead of him the hard yards of the next few years, which actually would, mitigate towards setting out a pathway of some sort in order to ameliorate the potential political heat and the issues that will come up. So I wouldn't be surprised if he gets used to what I suppose the Bank of England used to call sort of forward guidance on taxation. There's this notion that giving a few signals about self-employment, signaling some sort of capital changes or property changes 2 years or 3 years hence, so that actually when they come, they've almost been sort of factored into the political process. But I think that's as close as you're going to get to some sort of ad hoc Office of Tax Strategy. Beyond that, until you get a Prime Minister who is inherently really interested in tax strategy and in a more stable environment. Theresa May, she wasn't particularly interested in the economics side of things. That was Home Office. Boris is Brexit, obviously, and all of those things. So I think in a way, right now you've got as much chance of stability as possible. The one area where you may be able to get some cross-party agreement is possibly social care reform. I would have thought that's been so under the spotlight, and it was kicked around, and loads of people have paid lip service to cross-party working and the whole business about the death tax and all this. That one, you may be able to get a plan just about with a bit of foresight, but it would still take a level of imagination that I don't know. Maybe I'm not. Maybe I should be more optimistic. Maybe after a reshuffle, let's see what happens.
Thank you, Chris. We're just about on time, so what I'm going to go to the what it'll be the last question, and I'll start with Stuart on that. And it's if we actually cast ourselves forward, and it's now the 24th of June 2030, and we're all looking back over the decade just gone. What do you hope we'll be talking about, and as the successes and the achievements in the tax system in the next 10 years? Stuart, I'll start with you.
Gosh, that's a difficult one. I'll say what I think I would hope for and what I think we can realistically expect are not necessarily the same thing. I think one thing that we would obviously look for, we can't underestimate the extent to which the COVID-19 crisis and its aftermath is going to dominate the next few years, let alone the next few months. And so having tax policy playing an appropriate role there, I think it has to be something that we hope we can look back on in 10 years' time and see was done well. And beyond that, I think you do just have to look at, well, what are the big challenges that we face, and the role of taxation within that. Again, climate change is a great challenge for our generation. I would hope that we can see some more coherent strategy and some serious action being taken on that. Beyond that, I think we're going back to the various things we've talked about previously on the taxation of the self-employed, on property taxation, on business taxation, and so on. Just progress in as many of those areas as possible is what I would like to see.
David, what would?
Well, I think I would. I mean, it's a difficult question. I think I'd probably come back to my earlier tests, if you like, that we have got a tax system that is making the appropriate contribution to the public finances, which I think will be a bigger contribution than was necessary in the past. That is still enables the economy to grow, that is one that encourages an enterprising and dynamic pro-growth and pro-business economy. And one would hope that those objectives have been delivered in a way that has maintained public support and public confidence. That's an enormous challenge to set out to the ministers for the next decade. As I say, it was a harder task than for those of us who've been ministers in the past decade. But if the country can achieve all of that, then it'll be as far as tax policy is concerned, a pretty good place.
Chris?
Yeah, I mean, you've got to hope that in 10 years' time we become less ideological, more strategic. Advanced planning is there's some sort of premium for policymakers that are rewarded for showing that level of pace. I think the problem you've got is when you look at those graphs on the problem of the financial crisis versus now. I mean, that was just a sort of hors d'oeuvre compared to the main course. I mean, it is so difficult, and I think you still haven't quite got amongst the body politic a willingness to accept that the resources of the government are they're not infinite, and we're all putting all our eggs in an ultra low interest rate environment to sort of get us through all of this. And if you end up with an inflationary situation or interest rates even ticking up a little bit, you're really in a very imbalanced set of circumstances. So I think the fact that there is going to have to be tax changes have to be done. They'll probably be done fairly stealthily. I imagine there'll be a need to stimulate the economy for the next few years. So I wouldn't be at all surprised if there is a sort of narrative that comes out a little bit that we're actually wanting to disincentivize saving to a certain degree. So almost, we want people to consume, we don't want people to hoard. Maybe this is the end, the sort of tapering off of the ISA bonanza will come along. I don't know. I mean, you could do something on pensions tax relief, rate harmonisation under the guise of that. I don't know. I think you might see an emergence of a bit of nudge. This isn't really taxes, but it's nudging behaviour in a certain way. So getting people to auto-enroll or auto-insure themselves against certain risks, a bit like we've seen on pensions in a way, rather than do things through public expenditure. So I don't know, maybe on the welfare side of things. I don't know. I think those are the sorts of areas, but certainly social care reform and environmental is where the consensus has got to be a premium, really.
Jane, so in 10 years' time, what will we be looking back on? You're afraid you're on mute, Jane.
Sorry. Yes, I don't know what we will be looking at back on, but I know what I'd like to be looking back on, and that is the execution of a strategic plan in which the tax system plays a part in recovery and growth, and it does so in a way that reduces inequality and helps to facilitate the decarbonisation of the economy.
Thank you very much. Thank you. And I will now bring this to a close. And I'd like to thank everybody who's participated. I'd like to thank the team that's actually set this up at the CIOT for enabling us to do this virtual event. And I'd like to thank, in particular, of course, all of our panelists for their tremendous and generous contribution today. And I'd like to, everybody out there watching on video, could you give the panelists a virtual round of applause? And thank you very much. There will be further events from the CIOT and the IFS in due course. I would like to quickly draw your attention to the prestigious Chartered Tax Advisors address, which will take place at 5 p.m. on the 2nd of July. This is normally by invitation only, but this year's open to all at the very modest cost of a £10 donation to the tax charities, that's Tax Aid and Tax Help for Older People. The address is to be given by Professor Stephen Mason, who's one of the leading thinkers on professional regulation and the author of a recent independent report into the regulation of the legal profession. Regulation of the tax profession is highly topical in light of the recent call for evidence into raising standards in the tax profession following the Morse report, and Professor Mason will give us a 30-minute keynote speech to be followed by a panel discussion, and I hope to see as many of you virtually as you can at that event. So once again, thank you to the panel, thank you all for listening, and stay safe and have a great rest of the day. Thank you very much.